Hello, everyone. Can you see or hear us? We see people joining. Thank you very much for joining the webinar about the DORA. Let us wait for another couple of minutes for people to join because we see people joining as we speak and we're admitting them. And then we will be happy to start our webinar. So should we start? Thank you very much all for joining our webinar today. As you know, late 2022, the DORA Operational Resilience Act was published. DORA is new European regulation, which will create a regulatory framework where European Union financial entities will need to demonstrate the ability to resist, respond, and recover from all type of information and communication technology related disruptions and threats. Financial entities will need to be compliant with DORA by 17th of January next year, which is already around the corner. As a service provider, London Stock Exchange Data and Analytics has been actively engaged in preparations for DORA since the Act was published. We are welcome the opportunity to engage with you, our key central bank customers, to share insights with you on our vision, how we plan to support European Union regulated financial entities for them to comply with this new regulation. Today, the webinar is dedicated to central banks only, so the whole audience is only you. And we have two brilliant speakers. We have James Cotton, our EU DORA program manager, who has a great experience in working with us in the consulting firms and who is our global regulatory compliance guru. And we have a Nuno Neto, who is a global head of business development responsible for partnering with central banks, ministries of finance, and the government authorities across the world on their development and partnering with their market-wide initiatives and day-to-day jobs. So on our event today will be divided into the two parts. First, James will present our views of elements of DORA that impact us as ICT service provider, how we will support financial entities in their compliance path, our approach to compliance with DORA. And we would be really interested to hear your questions and discuss your expert views on the critical or important functions that ICT service support. The James part of the webinar will take around an hour, where he will be speaking 30 to 40 minutes, and then we will be looking forward to hear your questions. And, we'll be really looking forward to hear your questions and answer them. And maybe it will be really great if we could have an open forum discussion with what you are thinking about DORA and about the readiness of everyone. And then on the second part of the webinar, right after the James DORA part, Nuno will also touch on how LSEG is supporting central banks and what we observe as a central bank on the digital transformation trades and some innovative ideas that we see across the world. With this, I would love to hand over to James, that he could start sharing and just help us to deep dive into the DORA world.
Thanks very much. I appreciate the introduction.
And on this note, we've lost James. So let's give him a second to reconnect. And then we will take it from there. So thank you very much again for joining. So probably let's give a second to James, and if he's not joining, we will switch the turns. And Nuno will take his part first, and then James will continue with DORA. If you don't mind, let's wait for another minute. And take it from there. Of course, I wanted to mention that if you will have questions during the session, please feel free to put them into the Q&A chat, and I will voice them to James or Nuno at the end of the, during the Q&A session. So please don't hold till the very end. You can put questions when they pop up, and then we will see how much time do we need for questions to address them all and have enough time. So, James,
I apologize.
Welcome back.
Thank you. My team's just decided to not be resilient. I'm very sorry to say. So apologies to all of you. Let me see if I can share my screen, and we'll get going.
No worries. I just had the chance to say everyone that they can ask questions during your presentation and don't hold the breath before you finish. So
okay,
thank you
wonderful.
so much.
Certainly, thank you. So thanks you all for joining. I'm going to take you all through, and sorry, is my screen visible now? Yes? All good?
Yes,
Great.
we can hear well, yeah.
Wonderful, thank you. So I'm going to talk you through LSEG's approach to how we intend to support EU regulated financial entities in their path to DORA compliance. So I'll do a little overview of the regs, talk about our approach to supporting DORA compliance for financial entities, quite a bit of information on the Register of Information, and a big focus on critical or important functions, because there's a distinction between what we need to do to support our customers depending on whether or not our ICT services support their critical or important functions. Now, to help people with their contractual compliance with DORA, we've put together an Operational Resilience Annex. We don't call it a DORA Annex, it's actually the Operational Resilience Annex, because it addresses not only DORA, but some other requirements of resilience regulations, and we're leaving that flexible because we know other stuff's coming. And then we give some recommendations to our customers about the path to DORA compliance. And again, I'm happy to there's a lot of content in here. You don't have to take notes on everything we present. We're going to share this with you. Here we go. So Anna's already given us a quick overview of DORA. It applies to EU financial entities in the 27 member states. My view is the objective is to enhance the overall resilience of the financial services ecosystem. And by that, I mean you as central banks can regulate the financial entities themselves, but you also recognize that the banks themselves are part of this broader ecosystem, including data and service providers, including web service providers, et cetera, cloud service providers, who are typically outside the remit of central bank regulation. So DORA applies directly to those EU FEs, but indirectly to entities like us, companies like us, as ICT service providers delivering service to those financial entities. We know the timeline, it's just around the corner, and services that support critical or important functions have to meet higher standards for ICT risk management. And the contracts that customers have with us must support all the objectives of the Act. And we have made very sure that we address all of the above through our Operational Resilience Annex, and we're backing that up with operational readiness inside here in LSEG. So I'd like to talk now first about the regs that are relevant to ICT service providers, because and first a little overview of the big chunks of DORA. It's very much about this ICT risk management framework. It includes chapters on incident reporting. We are going to make sure we support financial entities in their incident reporting. For example, if they do have an incident that occurs, they have a 4-hour time window to report to you. We are enhancing our notification processes and expanding our channels where customers can acquire those notifications. And our standard is 10 minutes between incident and notification to our customers, and that will be done through our Operational Resilience portal. There's requirements around testing. We, as a third-party provider, will help customers who want us to participate in their joint threat-led penetration testing. There's some optional wording around information sharing. The Act encourages banks who suffer incidents to do broader reporting and share with their peers. But the element of DORA that we as an ICT third-party provider are most interested in is this ICT third-party risk management, which requires the regulated FEs to enhance their risk management standards and us as providers to support them in meeting those risk standards. So the overall DORA Act consists mainly of 6 chapters, but this chapter 5 is the one that is most important to us as an ICT service provider. So what I'd like to do now is talk through those elements of the DORA regs that are most relevant to us in chapter 5, and that's basically Articles 28, 30, and then ultimately 33, because we expect to be named, actually we are certain we are going to be named as a critical ICT third-party provider, and we will fall under what's called regulatory oversight. We won't be a regulated entity in DNA, but we'll be subject to regulatory oversight from the lead overseer, which will probably be someone from ESMA. So Article 28 sets out some general principles in the key principles for ICT risk management. For example, it sets out that the financial entities must maintain a register of information with information on their ICT third parties in 28.3. We are going to be prepared to provide that information to support those financial entities completing that register. They have the right to inspection and audit. Now that is generally limited, not generally, it's specifically limited to services that are that support critical or important functions within the financial entity. They also have additional termination rights. They must maintain exit strategies. And of course, Article 28 is at what we refer to as the level 1 text of DORA, states in 28.9 and 28.10 that the Commission will publish implementation technical standards and regulatory technical standards, and that's plural. There are several RTS. There's one ITS. The ITS has not yet been adopted by the Commission. It's close to final, but we are working as if it were final and preparing our reporting and information to comply with the final draft that's currently in circulation. Now, all of the relevant terms from Article 28 and 30 have been incorporated into our Operational Resilience Annex. I'll show you a mapping of how those articles map specifically to clauses in our annex. And that's information we're providing to our customers to help their legal departments get comfortable with the contractual provisions that we're putting forward. Article 30 sets out those key contractual provisions that FEs must have with their ICT service providers. And 30 makes a distinction here between Article 30.2 and Article 30.3, where 30.2 is focused on all ICT services provided by us to our customers. And for those, in brief, we have to provide service descriptions, and we have to provide register of information. So for every single service we provide, we are going to deliver those through our customer portal on request to customers as they need them. But Article 30.3 has specific information about ICT services that support critical or important functions. And this includes adding things like SLAs, notice periods, information on our business continuity planning and test results, provisions to support exit strategies, etc. Now we're going to deploy an automated solution to help manage the distribution of not only the annex, but all the documents, data, and delivery of services that we need to support our customers' DORA compliance. Now, DORA in Chapter 5 also sets out this concept of identification of critical ICT third-party service providers. So if you think back to when I mentioned earlier about regulation of the financial ecosystem, the ESAs did a dry run of the Register of Information earlier this year, and one of the objectives of that was to gather information on where they thought they would see concentration risk in the market, because concentration risk can be endemic and cause significant problems. So we are confident that we are going to appear in a large number of people's register of information. And as such, the regulators already know this, and they've contacted us about being designated as a critical ICT third-party service provider. We refer to that as a CTPP, a critical third-party provider. We also know that there's upcoming regs in the UK, for example. The UK CTP has already been agreed to and is just ready to be read in by Parliament and will become law here. So we are well accustomed to being closely overseen as a critical third-party provider. The designation is supposed to happen in Q2 of 25 and effective July 1 of 25. Article 32 sets out the structure of how the oversight framework will work, and Article 33 sets out the tasks of the lead overseer, which essentially is the high-level framework that they'll use to assess us. Now, we've got a big group program in place that's assuring that we'll be fully compliant with the framework, and that framework is shown here, these 9 points, slightly abbreviated. Now, this framework is pretty high level because it's only 9 points. There's an additional RTS, a regulatory technical standard, that has been published that we've broken down about 80 compliance points from that. So they're all mapped to these 9 here, A through I, and they go into greater detail. And what they are is that they're very much about having controls in place to assure we can withstand and respond to ICT incidents and threats. They go into greater detail, and we have broken them into roughly 50-50 or half and half, 40-40 actually. About 40 controls around what we call engineering controls. So those are tech. There's another dozen or so that are shared between tech and business, and then there's another, say, 30 that are very much business controls. What we have is a program in place to make sure all those controls are operational, that are being tested, because we want to make sure, we already are very confident that we would pass any regulatory review from the lead overseer, but we'd be able to quite easily demonstrate compliance with this framework. There's a little bit of, carrot and stick here. We're actually pleased to be designated because it's almost like a badge of honor to say we're designated as we are critical to the market. We recognize that, we know that, we operate to higher standards than some of our competitors and others do. Now the stick part is, of course, the lead overseer can impose penalties on us. So we'd have revenue at risk if we're not compliant, but for us, it's more about reputational risk and making sure we are going to be able to support this. So let me now talk a bit about our approach to how we support customers with their DORA compliance. Our work, because we support several thousand financial entities across the EU, and they all have a lot of work to do to be DORA compliant, we are doing everything we can to automate and operationalize everything so it's a straight through processing type of operation for our customers. And that's concentrated around use of our LSEG resilience portal. Now, on the left, you see what we've done is broken down our customers' needs and requirements into three big buckets. They need certain documents, they need certain data, and they need to fulfill certain requests for services. So for documents, I mentioned 30.2 says all ICT services, you have to have a service description. Under 30.3, it says you need to have full service level descriptions, including quantitative and qualitative performance targets, otherwise known as SLAs. For data, our customers are going to have to complete their register of information. We are going to have register data available for them, as well as SLA performance data, so they can do their ICT risk management appropriately. And then we're going to also have on our portal a workflow system that'll allow customers to post requests. For example, customers that are entitled to audit will be able to request permission to do so. We are generally going to support most audit and assurance requests with assurance, because audit is a slow, painful, expensive process. We will support it because we are required to. We would prefer our customers to use attestation reports, SOC reports, and other means to execute their risk management and review of us. We also believe they'll have some greater confidence in our attestations and reporting because of our designation as a critical third-party provider. The portal will allow customers to request, for example, participation threat-led pen testing, which they need to execute, and other types of service requests. So this customer portal is going live in December, but the first thing that's coming live in late October is our Resilience Annex, which is going to enable customers to meet their requirements under Article 30 to update their contracts with ICT service providers. And so starting in late October, they'll be able to request the Resilience Annex. I'm going to talk about that Annex request process a little bit later. And then in early December, customers can log on to request documents, as I mentioned, things like service descriptions, our statement of service, which contains wording on incident management, and as well as data, and submit requests for services. Now, if this doesn't work, and we expect it will for virtually all instances, we also, of course, have our customer assurance team standing by to support our customers if they have additional DORA queries that they don't feel like they can address with the self-service or through the portal. Now, the Operational Resilience Annex. This is written in a way that helps our customers make sure they can be compliant with Articles 28 and 30, which set out contractual requirements. It also covers similar regulations around resilience. And we've been working on that annex since I think I saw the first draft in February or January. So 9 months in the making. In April, May, and June, we did some market testing of our annex. We went out to a number of significant financial institutions, key accounts of ours that operate in the EU. We got feedback from them. We've been engaged with external counsel. So we're very comfortable that the annex covers all the requirements of both our customers' needs and fully complies with the DORA requirements and will be seen that way by a regulator or the ESAs. So the annex will be available on request in late October. What that will do is it kicks off when a customer logs in, and I'll take you through that process a little bit later. They log in, they request the annex. It kicks off a DocuSign e-sign process, and we'll be asking customers for a few data points from their functions register number 6 out of the register of information to help us understand better the functions that we are supporting. This is a mapping of how we have gone through all the articles from DORA. On the right side, you see here primarily articles 30 and 28 and 30. Summarize that into a general DORA requirement and summarize what our service to our customers and prospective customers will be to support them with the compliance with those particular articles. So financial entities have to complete their register of information. They're already coming to us, and we're providing them where possible with reports on where, for example, where we process and store data, where we use subcontractors. They need to make sure we're meeting appropriate InfoSec security standards. So we provide our information security policies and standards to help them with their risk management, etc. They need to conduct due diligence on us. So we have our service request portal for audit and assurance things, and then we have the assurance reporting hub available. So I won't read through all of these. I'll leave it to you to cover later. Now, I wanted to talk a bit more about the Register of Information itself and CIFs. And I'll start with a couple of definitions right out of Article 3, the definition for a critical or important function. And I've bolded what I think is the essential part of that, which is a CIF is something whose disruption would materially impair the financial performance of the financial entity or materially impair their continuing compliance. So anything that would prevent them from doing their compliance reporting or would have an impact on their financial position. The following definition on ICT services, well, essentially, virtually everything that LSEG DNA does, including risk intelligence, FTSE, and FX, are ICT services. It's the provision of digital and data services. And what we're trying to do, we've started doing, and we will continue to do, is map our customers' critical or important functions, or actually all of their business functions, to our ICT services. And here's an example where here's a few examples where we're reasonably confident that customers are going to say, yes, LSEG, we believe that your ICT service supports our critical function. So if you're a bank, I believe, and you probably would agree, that payments is a critical function of a bank. They might have a supporting business process like sanction screening to enable their payments process. There's other things that will enable their payments function, rather. But WorldCheck is a very popular service that we provide that enables customers to do effective sanction screening, so they make sure they're not paying sanctioned individuals. So we are reasonably confident that our customers are going to come to us and say, yep, WorldCheck supports my critical function. What we don't know yet is what the financial entities are going to call these functions. There is no standard function list out there. So we're going to be building one up as customers apply for the annex, which you'll see in a couple of pages here. Other examples, let's say if you're a fund manager, you might have an underlying, you might call your function fund management, you might call it fund valuation, you might call it NAV calculation. Again, we don't know the level at which financial entities will define functions. But I know if I'm doing NAV calculation as a fund manager, I'll use a product like Datascope, which will provide, for example, end-of-day pricing for a portfolio that a customer's configured in our service. That would also be an example of an ICT service where we'd process and store customer data. So a customer would log into Datascope, they'd submit the information that they wish to have from, let's say, an intraday snap or an end of day report for pricing for their portfolio or multiple funds that they manage. They download those, they feed them into their fund valuation system, and off we go. So absolutely critical to them. We recognize that it's one of our flagship services, and we fully expect it's going to be named as what we call a client critical service. So that's not a DORA term, it's an LSEG term. Customers have critical or important functions, or CIFs. We have what we call client critical services that support those CIFs, and we're going to be building up our information library in multiple ways to make sure we have appropriately designated our services as client critical services when they need to be. So a bit more on why identification of those CIFs is so important. It's mainly because DORA Article 30.2 applies to all ICT services, and primarily that's about providing service descriptions and information on subcontracting and information for the register, basically. But Article 30.3 only applies to services that support CIFs, and it requires us to operate and our customers to operate at a higher standard. So it's really important we understand those CIFs so we know we can meet their compliance needs, and we can provide that information and services seamlessly to them. So for example, 30.3 says full service level descriptions as opposed to service level descriptions, and those include quantitative and qualitative performance targets, which we also call SLAs. It also includes things like the right to monitor or audit, which part of that is set out in Article 28, but it's specifically restricted here in Article 30.3E that says the customers that are using our service to support a CIF have the right to audit. And that's really important for us to be able to be geared up to appropriately support customers in their DORA path to compliance. So now a bit more about the register itself. This is taken out of the final draft on the ITS Register of Information. We just refer to it as the register. We are most interested, well, EU financial entities have to cover all of this. We are most interested in information, providing information for Register 2, because it's the contractual arrangements that we have with our customers, and as well as providing information for Register 5, most importantly, this ICT supply chain information. Now, interestingly and unfortunately, there isn't a connection between the functions and the supply chain, though I strongly believe there should be. So if you see at the bottom of this diagram, there's these colored circles, and those colored circles show the interrelationship or the keys that link these different registers. So the LEI of, this would be the LEI of the entity using the services. So that would be the financial entity itself. This other purple dot is the LEI of the provider. That would be us, LSEG. So we appear in this Register 2.3 as well as 2.1 as well as Register 5 in both places. What I don't see the interrelationship is the function identifier, the brown bubble. It is related to the contractual information, but it isn't related to the specific ICT service supply chain, where it actually should be. And we fed that information back to the ESAs, asking them to enhance the register. And every customer that came to us with dry run requests for their register dry run this year, they all took the register itself and modified it and said, we are asking you specifically for information about product X that supports function Y. So we do know that relationship should exist. It doesn't yet. I'm sure we're gonna get to a good point where that does happen. But really important for everyone to understand that what customers identify as functions, and in particular critical functions, is very strongly correlated to their ICT supply chain and the analysis that they need to do, the risk management they need to do on that supply chain. So the functions register 6 has 3 key fields that we're very interested in. First, it lists all functions that a financial entity delivers. The 3 key fields that we care about are the name of the function, whether or not it's critical, and the reasons for its criticality or importance, which I know is optional, but we're hoping customers will share that information with us. We're going to capture this information ideally in several ways, and one of them includes when customers request the LSEG Operational Resilience Annex. So first, I'm going to talk about the annex itself, and then talk about the request process that we're asking customers to follow. I know this is a bit of an eye chart. Again, you're going to be able to download this, but this is a summary of the wording in our annex grouped into these 6 key areas of confidentiality, privacy, security, and data. There's clauses on ICT incidents. There's clauses on audit, monitoring, cooperation with regulators. So we are committing to cooperating with you, regulators, as you require in our interaction with our financial entities, as well as with you and the lead overseer. Section on subcontracting. Their customers have new rights to termination and exit, and so our annex supports that. And then finally, the service descriptions and service levels. Now, what we've done to enable our financial entity customers to manage the analysis of our annex against the requirements of DORA is we've completed this very comprehensive mapping of, on the left, all of the articles from DORA that are relevant to contracts, mainly from Article 30, but also termination rights from 28.7. And we've broken our annex into 2 parts, Part A and Part B. You see these same 6 sections in the center here, but Part A applies to all ICT services, which is generally covered by Article 30.2 in DORA. And Part B of the annex applies only to ICT services supporting critical or important functions. And I know this is a very busy page, so I've broken one example down here for you to show you how this chart is working. So on the left side, I have Article 30.3a, and this is the wording from the DORA Level 1 text about service level descriptions and quantitative and qualitative performance targets. On the right side, we see that's part of Annex Part B, because this only applies to services that support critical or important functions. It's in Part B that we, in our section, or in our clause 4.7 on service levels, here's the wording from our annex. So what we're enabling our financial entity customers to be able to do is to take our annex, take this complete mapping, bring it to their legal department and say, hey, do you feel comfortable that the LSEG Operational Resilience Annex covers all that we need to cover as regards DORA? And we're highly confident that it does. Now, one thing that we're making very clear to our customers is that the LSEG Operational Resilience Annex is non-negotiable. One of the main reasons it is because we're a one-to-many service provider, and we're supporting thousands of financial entities in the EU. And if we were to change our processes for customers, we'd end up with basically a non-resilient service, which is contrary to the whole spirit of DORA. So we really need to keep our processes standardized and operationalized so we can support customers with their compliance needs. We've been approached many times by customers saying, here's our annex. We politely refuse and we say, look, this is how we need to support you. I think you as regulators and the ESAs will see this will be actually reasonably common among the critical ICT third-party providers. We know, for example, Amazon Web Services is in the same position. They are not engaging individually with customers. They have their annex for DORA, and that's the way they need to operate as a cloud service provider. We're in a similar position as a data service provider. So back to the register, and so here again is the register and those 3 critical fields. And what I want to talk about now is our annex request process and how we're taking that information gathering that information for our customers so we can better support them in their DORA compliance. This is a conceptual view, and I'll show you the actual views. One of the questions we'll ask them is if their registered data has been submitted to which of the ESAs they submit their register to. It may be multiple. And then we'll present them with the services that they take from LSEG. And we're asking them for this given service, tell us the function or functions that support it, and tell us whether or not it's critical, and please provide commentary as to why it's a critical function. So we'll present that to customers and ask them in screens like this. But first, what we'll be asking them in the resilience request process is to validate some information about their organization, explain to them why we need the information from their functions register, and then get into the specifics where we say, okay, you, our dear customer, take LSEG Workspace. Please tell us the function or functions that support it. Is it critical, and what's the rationale? You can add additional functions if there are multiple functions supported by the service. It will carry on to the next service and the next. If they believe they don't consider that service to be in scope for DORA at all, they can remove it, but that will restrict what rights they have under DORA, because if they're not keeping us informed of which of our services support which of their functions, it will change their rights under DORA in accordance with the annex that we've provided to them. So this is the path that we recommend to our customers to go on their way to DORA compliance. We want them very much to focus first on getting their functions register populated and start populating the rest of the register of information. Then get their contracts in order. Make sure they have an annex in place like the one that we are offering to provide. They'll need to do that with, depending upon the entity, dozens, hundreds, perhaps many hundreds of ICT service providers. Then they go down the path of making their register more fully compliant, in particular, building out the detail in that ICT Supply Chain Register 502. They'll be populating that with information from ICT providers like us, particularly for registers 2 and 5. We're going to make all of that available through the LSEG Resilience Portal. That's going to be up and running December 2024 to support all this compliance, including service requests for documents and self-service for documents and requests for data and services, including that register data. We provide our customers with a number of resources. One is this is a link to the Resilience Portal itself, resilienchub.lseg.com. And we're releasing functionality in phases starting later this month. There's additional information available for customers on My Account, and that's something that a lot of our customers use already. We're just expanding the functionality to be DORA compliant. So that's all I had for structured presentation. Happy to take questions. I don't know if they're in the Q&A, or actually let me pass back to Anna, who's our host. Is going to help guide us through this process. Yes.
Thank you very much for the presentation. It's not an easy topic for sure. Thank you for making it, putting it so structured to us. And thank you very much for everyone who submitted the questions to the Q&A. We have 3 questions at the moment. So let me start from one of them. So question number 1 is, which legal entity within the European Union will monitor if financial institutions will comply with DORA, and what are the implications for not following DORA?
So the European supervisory authorities sit at the top of the food chain in DORA, and it consists of the 3 oversight organizations, the EBA, the ESMA Securities, and EIOPA Insurance and Pensions Advisors. So it really depends upon the structure of your financial entity. And now if you're not regulated by one of them, then you really don't have much to worry about because you're not an EU regulated financial entity and DORA doesn't apply. But I expect if you chatted with your folks in legal and compliance, they'd tell you, they'd have contacts at that regulator, and you'd know with whom you needed to be compliant. Now, the implications for not following DORA. We held a seminar in February, pretty early on, February this year, and we had some guest speakers, and one of them was from a law firm who was focused on DORA and compliance with it. And her advice was, her opinion, not advice, because lawyers don't give advice unless you pay for it. So her opinion was that a lot of entities would take a kind of day one, day two approach with DORA. They would want to demonstrate to their regulator that they are on a path to compliance. We didn't predict back in February, nor do we predict right now, that people are going to be 100% ready on day one. Now, again, that's not advice from me. We are advising clients, get your contracts in order, build out your registers, have a plan for doing it. Now, the implications for not following DORA would be, I think, if you weren't able to demonstrate a path to compliance, you'd have problems with your regulator. I think that pressure will increase over time, but her opinion was, I wouldn't want to be the financial entity that has a significant outage or ICT incident in the early days of DORA, because they're going to be the one that gets picked on. And if they can't demonstrate why they weren't able to respond to and withstand that ICT incident, it's going to be quite challenging and difficult for them. So my best advice is, don't have any problems, don't call any attention to yourself, but certainly make sure you have a program that demonstrates true path to compliance.
Thank you very much. And the second question is linked to the first question. On the back of the previous question, which department will be responsible for DORA compliance? Legal, IT, internal audit, or any committee, or it should be a committee within the organization?
So we have seen a variety of responses from our customers around how they respond to DORA. Often it is initially led by legal, who are doing interpretation, but then taken over by a risk management function, because it's very much about risk management. Now, as far as interaction with regulators goes, that tends to be a legal and compliance function. And so therefore, there's often widespread committees or program structures within an organization to make sure there's appropriate governance that involves all of these folks. Actually, it's hard to run a DORA program without legal to interpret the regs, without IT to make sure you're putting appropriate controls in place, without third-party risk management to make sure you're conducting the appropriate risk questionnaires and doing the deep dives into customers or suppliers that support your critical or important functions. So there is an interesting recently published McKinsey report on how DORA, how customers are seeking to comply with DORA, and it demonstrates that it's a widespread. There's quite a lot of variation between how customers respond. So there's no one single right answer, but certainly it needs a cross-functional response.
Thank you very much. And the last question that we have in the chat, please don't hesitate to put your questions to the chat now, we will answer them, is from the central bank's perspective. So from the central bank's perspective, multiple departments should collaborate to ensure full compliance with DORA, like IT, internal audit, legal compliance, as you just said. Having that, our participant was just wondering, what is it and will be expected going forward from central banks? For example, will DORA require establishing a separate corporate risk management unit? Do you foresee anything of this, or you see it happening?
So central banks, I believe, are in an interesting position, because I don't believe you're regulated by any of this, but you're the regulator. You are part of the regulatory structure. Now, I would fully expect that you all practice what you preach. As regulators and central bank functions, I think you'd want to be able to demonstrate similar expertise in corporate risk, ICT risk management, third-party risk management. I think when Nuno, who knows quite a bit more about what you folks do and how it works, presents in the next segment, we might be able to revisit that. I am not an expert in central bank operations. I just know you keep things safe and stable, which makes me happy. I'm very pleased that I see stability in currency markets and across the EU entities. So congratulations to you for doing an excellent job. But yeah, I would expect that if we are supporting you in your trading functions and other things that help you manage currency stability and market stability, then yeah, having good sound risk management practices in place would certainly make sense.
Thank you very much, James. That's all. We don't have more questions. Please use this moment to ask your question, to put it into the chat or into the Q&A.
Okay.
Yeah. Okay. 3, 2, 1. No more questions to this point. If you will have questions in future, please come to your account manager or to James, you know him now, about the DORA. And now I think we can give the stage to Nuno and his screen. So Nuno, it seems like we're seeing your phone because we have a very big vertical black screen and introduction to LSEG in the middle of it.
Okay, let me try to change the screen. Just give me a second.
So, and I think for all of you, this is just a chance to ask your questions from James before he has hidden behind Nuno.
Okay, what about now?
Now it's perfect. Okay, over
Fantastic.
to you,
I
Nuno.
just had to shift things around. Fantastic. Thank you very much, James and the team for the questions. So now I will cover briefly on how do we are partnering with central banks, not only in terms of helping and supporting their own internal operations, but also in terms of transforming financial markets. And then I will cover a bit more about the current digital trends that we are observing when dealing with central banks globally. So we'll start with a quick overview on how do we support central banks in general and highlighting some of the key functions that we partner and work very closely. But most importantly, we work with regulators, with central banks, with market infrastructure institutions, such as exchanges and different providers to ensure financial market stability and ensure that markets operate efficiently. So we already support 150 central banks globally across multiple functions. An existing function and increase in terms of demand has been enabling trade reporting, and that has been accelerated with the introduction of MiFID as well, leveraging some of the technology that we have in place. We also provide what we call financial market infrastructure technology in terms of the exchange technology, CSDs, clearing, surveillance. So the same technology that LSE, London Stock Exchange, uses is the same technology that we support a lot of markets and different institutions with that to ensure that we enable and support the adoption of best practices. Sustainable finance has been a strong focus from governments and regulators, and naturally we support capital raising and focus on enabling and having the right support for green bond issuance. And then we have developed capabilities to really support financial markets transactions. One through our auctions capabilities that last year has achieved $7 trillion of market activity, and naturally our FX trading capabilities. But most importantly is really looking at some of the key functions within central banks and where we support and collaborate the most, starting with financial markets departments, both domestically and reserve management. Domestically, depending on the level of the market sophistication and how active central banks are or not in managing liquidity, there will be different needs in terms of the liquidity standing facilities or actively providing hard currency to those markets, especially if we're talking about frontier and emerging markets. So it's really important to support central banks with different trading capabilities and protocols to allow to effective inject or mop in liquidity at different times and utilizing a diversity of instruments that have the most impactful in doing that, either through the entire market or doing on a bilateral basis. So some of these capabilities that you might be familiar with are auctions, FXO, or FX trading capabilities. And then we move into more the international reserves, which is more of a asset management function within central bank. And naturally, there is an element of setting the investment strategy, asset allocation, tactical allocation. So there is an element of news, information, and then execution in terms of ensure that there is an order management system and a portfolio management system to effectively execute those orders, align and comply with the investment strategy, and ensure that you can do your benchmark performance analysis, attribution, and then risk management within those functions. So really leveraging the entire workflow from trade idealization to execution to portfolio management, risk management, and integration with treasury management systems. One of the elements that we have seen significant increasing over time is really around market surveillance and financial stability. So ensure that central banks have access to real-time information on what is happening in the market, either from a trading activity or just understanding what different news and activities are taking place that could potentially have a systemic risk to central banks. So really empowering them with trade reporting capabilities like Univista from LSE or other capabilities that allow to report trades in real time from an FX and money market perspective that are crucial to support and implementing open market operations and the respective monetary policy. And then we move more into the economic side and market analysis. Naturally, economic research is a very important function within central banks, and they rely significantly on proprietary data, but also third-party data. So leveraging solutions like DataStream is crucial in terms of the depth and the breadth of a large economic and financial data set that provides and supports building forecasting models, but also in terms of analytical and insights when producing regular reports, such as the monetary policy report, financial stability reports that get published. A lot of the data sets that feed into that naturally come from DataStream as well. Then when we talk about more market analysis and risk management, there are different elements to that. One is ensure that they have access to real-time information on what is happening in the market in terms of news, historical data, but real-time data as well, sentiment, and basically also understanding what is the market forecasting. So having forecasting models and leveraging Reuters polls, which continues to be a market leading news agency in the world. So leveraging all the information in real time is crucial to always have an accurate picture of what is happening in the market. Then risk management can have multiple elements. There is enterprise risk. In this particular segment, I'm talking more about financial and credit risk, which is linked with the financial markets activities and with reserves management. Naturally, a lot of central banks have a significant capital allocated. They are large, buy-side institutions from that segment, and they have a diversified portfolio going beyond the traditional US treasuries, but really expanding into other more complex instruments from equity, mortgage-backed securities, sometimes in real estate and different segments. So having the right analytics that allows them to really calculate consistently the yield, the risk, and the return, and have the right measures to ensure that they comply with internal policies from an investment perspective and respective risk. And this naturally then also feeds into the wide enterprise risk and operational risk, which I will touch upon in a few minutes in a bit more detail as well. And then the last element is really, how do we support central banks in delivering customer solutions? We're talking about 150 plus central banks. Each one is very different. And there is always an economic and local context to it. So we need to really understand what are their requirements, what is the context in terms of financial markets development in that particular market. So we can collaborate and work and build solutions that will make a positive impact either on internal functions, but also in terms of financial markets development. And in order to do that, it's really important to understand what is the context that we are talking about in terms of financial markets evolution, what are the key trends that we need to adapt to as an institution, but also from a central bank's perspective, because that will set the tone in terms of the digital market transformation trends as well. So I'll move quickly into highlighting some of the key financial market trends, and then hopefully that will lead nicely into what we are seeing when dealing with central banks globally. What are the key focus from a financial transformation point of view? So when we talk about financial markets, I think everyone can acknowledge that we have seen a significant amount of change, and is a very constant and rapid change that naturally creates challenges, but also opportunities for all market participants to operate. And regulatory landscape continues to evolve very actively. We just talked about DORA, DORA Act that will come into effective next year. So that's just an example of elements. So regulators continue to play a key role in building awareness, in supporting the adoption of new technologies as well. So it's a really important role, and finding the right approach in terms of ensuring that the regulatory framework maintains a fine balance between fostering innovation, maintain a balance as well with competition and financial stability. So what we have seen in terms of focus is really on operational resiliency. So we just talked about DORA, credit risk and capital framework, really avoiding another banking crisis that we have seen that sometimes can have a very strong systemic risk. Digital assets and payments regulation on the back of blockchain and cryptocurrencies. There has been a strong focus on that. Financial crime continues to be a strong focus, also on the back of the digital, cash moving and becoming more digital. And definitely, the second part is really the strengthening and reinforcing the focus on the transition plans in terms of climate change, which really moves into the next step, which is the growth of sustainable finance, right? So we have seen significant shift to sustainable finance and ESG investing, which had been already underway, but I think just in the last 2-3 years, we have seen a significant acceleration on that segment. And what that means is there is a significant larger number of large institutional investors that are incorporating ESG metrics in their capital allocation. And there is also a focus globally from a regulatory point of view. EU, UK, US have been very active in driving these into regulation through ESG taxonomy and helping achieve global standardization, so it becomes easier to adopt this best practice. And there is also a focus from capacity building, awareness, and ensure that there are suitable technical solutions to collect and process and integrate ESG data into their internal process, which has been a challenge in the last couple of years. Then we move more into the digitization or electronification of workflows, especially from a financial institution's point of view. I think we all acknowledge that recent advance in technology means that financial markets are more digital than ever, and market participants are increasingly recognizing the role that technology can play in improving operational efficiency, that can mitigate risks, but at the same time unlocking growth opportunities, right? Especially in terms of new instruments, access to a wide range of trading strategies and algos, but also leveraging the technology to tap into younger segments of the market as a new investment wave. So plus the transparency and efficiency that automation brings to frontier markets, especially we've seen a significant move. Some of the markets have been lagging behind in adopting this technology. This will make them more efficient, more attractive to access international capital. Now, with this incredible amount of digitization, it also creates challenges, especially in terms of what we call the e-coms, communication surveillance from regulators' perspective. I think on the back of the pandemic, we have seen an explosion of electronic communication channels, chats, social media, and really that creates challenges for financial market institutions and trading related communications that are done through pre-approved and monitored channels, right? So we have seen, especially in the US, regulators being really active in investigating how large financial firms are monitoring employee communications, particularly if they are using what we call unauthorized applications such as WhatsApp that basically could result in communication not being monitored from their respective institutions, could lead to collusion. We have seen a lot of examples in the past on that. So really the focus to develop and implement more surveillance on communication as well. The last one is really around AI. I think AI is incredibly becoming a reality, especially in the last 2 years. So in the financial sector, AI is already used for algo trading, risk management, personalized financial advice, and also helps with detecting fraudulent transactions and improving, hopefully, customer service also in terms of chatbots being implemented by a lot of financial institutions. So I think AI is really enhancing operational efficiency, and the expectation is the new version of it, generative AI will achieve even more advanced capabilities in trying to mimic, human intellectual tasks as well. So this context hopefully sets the scene to what central banks are doing from a digital transformation as well. So when we talk about central banks, by default, they tend to be conservative in their nature, but I think that that has slowly changed and it's been changing over time, with central banks taking a lot more active role to look at new technologies, emerging technologies, to implement that and test and being part of the change as well, rather than waiting for what that will entail and then bring that. So the introduction and the deployment of new technologies like machine learning, cloud technologies, CBDCs, data tools, all of that are now being implemented through central banks or led by central banks. So they are taking a very active role. So let's go through some of the examples that we have seen when collaborating actively with central banks. One being, I think is quite clear and has been a hot topic. We have seen quite a lot. Many central banks have been exploring or already piloting CBDCs, so central bank digital currencies, to modernize different aspects. Modernize payment systems, enhance financial inclusion, and complete or with private cryptocurrencies. That is the element to ensure that there is a more standard, safe digital currency for them to operate. So what we have seen is there are around 130 plus countries that have been exploring CBDCs, while 50% of those, so more than 60 central banks, are actively or in advanced phases of exploration, development, piloting, and launch, with some markets already active, such as China, Bahamas, and the likes. So they are really taking an active role into why should we use cash that is not on a digital format as well. And then when we talk about that technology, we're really talking about DLT as well and blockchain. So I think central banks are investing in blockchain for its potential to improve transparency, security, efficiency in transactions cross-border and record keeping. And I think that links not only with CBDCs, but also the connectivity to other elements of the standard or the usual financial market ecosystem that is already in place. A good example is BIS, the innovation hub, through their project Agora, in collaboration with several central banks, that they are developing infrastructure to facilitate cross-border transactions. Another example being Bank of England launching a new project to simplify FX transactions, which aims to interlink with their RTGS and other payment technologies that are already in place. So really interoperability is really important when talking about new technologies. The third part is really about cloud computing and unlocking big data analytics. I think public cloud or cloud in general has been a common topic for many years, but I think central banks are now increasingly adopting cloud computing to enhance their operational efficiency and data management capabilities. So what that means in terms of enhanced data management is that fact that cloud services allow central banks to manage and analyze large volume of data in a more efficient way. And this is crucial for tasks such as statistic analysis, economic forecasting, and financial stability monitoring as well. And naturally, I think moving to the cloud, central banks can reduce significantly their IT infrastructure, and that also aligns with their goals in terms of reducing the carbon footprint as well. And naturally, cloud is really important to unlock other elements or new technologies, such as AI and machine learning. So we have seen several central banks already early adopters of machine learning from early days, especially applied to statistic and microanalysis. So the potential of AI to really improve productivity in that segment is really undeniable. So I think central banks are now slowly leveraging AI to analyze vast amount of data, improve forecasting models, and enhance naturally decision-making process. So this can also be used, as mentioned before, for detect trading activity and potentially identify trends or fraudulent activities from financial market players or different segments of the market. And then we're also moving to the next element, which is payments. So some of those are naturally interlinked either with CBDCs or DLT technology. But I think it's quite clear that in the last couple of years, it's been a significant focus in terms of adoption of also what we call the retail fast payments. And that basically just introduced a new level of convenience and efficiency from a timeliness perspective to to more the retail and the wholesale segment. So same time, there is an element of leveraging CBDCs that are gaining momentum. So it's really finding that balance between leveraging CBDCs, new technologies such as DLT or fast payments or upgrades of RTGS to achieve payments efficiency. A good example on that, for example, Central Bank of Brazil, has taken a lot of initiatives to really digitize the payments and have one of the highest in terms of financial inclusion as well. And in order to unlock a lot of that safely, one of the key components is digital identity solutions that will really support best practices from KYC and ML. So what that means is a lot of these innovations are required to have digital identity to improve security, efficiency, and the whole customer verification process, especially in the context of digital currencies, which central banks have been very active. So I think central banks have been very focused on supporting the use of innovation to improve security efficiency within the KYC process to ensure that they comply with the ML framework. So really important to apply a holistic digital framework that not only requires important, designed policies, but also technology that fosters both the inclusion, but also mitigate several associated risks with that. And when we talk about risks, one of them that comes to mind is naturally cybersecurity in this digital environment. And the fact that we now are more digital than ever, the amount of online interactions and transactions have become, significant. And with that in mind, there has been also a significant increase of cyber attacks, and they are becoming more frequent and unfortunately a lot more sophisticated. So it's really important that firms and policymakers are, looking at cyber risk as a major concern and been investing significantly to protect the sensitivity of the financial data that central banks hold. And naturally also, aligning with the DORA Act to ensure that the resiliency of the solutions in place to set up their, their efforts to foster a culture of continuous risk management and focus on cyber risk as well. And the last part is around, just going back slightly, apologies for that, is around interoperability and API connectivity. So a lot of these developments that are taking place and central banks are actively looking into them, but it's really important that they are not operating in silos and in independent, because then they will not unlock the full value of those developments. So a lot of central banks are promoting what we call open banking initiatives to facilitate the innovation in financial services, but also to improve customer access to that data. And one of the examples, again, going back to the CBDC's use cases, is really achieving interoperability between the CBDC, but also the existing market infrastructure in place to facilitate, one is the adoption, but also the seamless integration with the existing infrastructure to ensure that we leverage the latest technology and benefits, but we don't disrupt the entire industry and the current setup. So I think these trends that we've seen when engaging with the central bank, beyond the BAU that we already discussed in the first slide, it really shows a shift towards modernization, efficiency, and security within central banks. So I think the latest technology advancements will really play a key role in enabling that. So I think just to give a few examples, I think I'm just highlighting this from the demand and the potential that data and transformative technology can have, right? We already kind of covered this, the importance of, or leveraging the cloud, enabling, financial market participants to have access to more complex analytics, larger databases, and cloud can be, public, private, hybrid, there are different models. That's gonna unlock a lot more capabilities, real-time business insights, data-driven decision-making, and more in also advanced investment strategies for financial market institutions. But it's really about open data, agnostic APIs connectivity, cloud computing, that will really unlock AI as one of the capabilities to improve performance analytics, business intelligence, and decision-making process from a central bank's perspective. What is really interesting is when we look at central banks, based on a recent survey from the central banking fintech benchmarks, 50% of the central banks that respond to their survey, they confirm, more than 50%, close to 60, they are already using or incorporating AI in their activities. Different segments, probably early stages in some of these central banks, but I think it's becoming undeniable that there are a lot of benefits that can come from that. So we'd like now to cover 3 potential use cases that we've been discussing with different central banks and where we see potentially AI really adding significant value to their activities. One is naturally, I think is considering the survey is looking at not only at AI, but also large language models, so LLMs. So one of the key segments is economic analysis, right? It's quite evident, but just to reinforce that AI models can really help central banks to analyze vast amount of economic data, improve their economic analysis and forecasting accuracy as well. Additionally, this will enable them with real-time analysis of the economic indicators, market news, and really automate and produce efficient and accurate daily reporting, which is something that every single central bank does in terms of providing daily financial markets updates that sometimes are either published internally or externally. How can we automate those processes that are fairly repetitive and in some of them fairly standard in terms of analyzing a significant amount of data, collecting and summarization? So there is a lot of benefits in leveraging AI from an economic analysis in there. Then we move into what we call data analysis and processing, which can feed into economic analysis as well, or it can be used as a separate function. So in here is really about AI and LLMs processing and analyzing large data sets quickly, but also derive insights from different sources of information, going beyond the standard, news and financial markets data. Is really looking at alternative data sets such as social media, news, financial reports, economic indicators, and how do you combine all of that to generate additional insight, right? So it's really leveraging the applications of AI to provide that level of efficiency and effectively also in terms of the statistical processes. So this could really unlock the use of non-traditional data sources. So we already talked about news, but also, data like just text, images, video, audio, all of those sources can complement the existing data collection process to basically enhance and provide a lot more insightful analysis that provide not only static data, but real-time data coming from what is happening in real time in the context of financial markets. I think ECB has been very active in terms of incorporating that in their statistical process as well. And then another example is really about supervision and oversight. So naturally, AI can be used to enhance the supervisor framework and goes back to analyzing significant amount of data and identifying potential risks within the financial system, right? Additionally, can be used for stress testing, simulate very different scenarios of economic scenarios, bank stress testing, and really helping banks assess potential vulnerabilities in the financial system. One example of that being what BIS project Aurora is doing is really assisting central banks also in detecting financial crimes through AI, along with other technologies to improve the efficiency of analyzing financial crime data analytics. So it's really leveraging the latest technologies that will help improve efficiency, enhance decision-making process, but really important that all of this can only be achieved based on the accuracy of data and data management. So technology is just one element of it. Once deployed, do you have access to the right data, accurate data, and timely data in order to process and deliver those results? So just show some of the examples with these three key buckets. So one, it goes back to the economic analysis and the research that I was referring to, is how quickly can AI or LLM assist in drafting and summarizing research papers or policy documents or a daily market research. So really thinking about some of the processes that are currently in place at your institutions and how we could support, economists, financial market teams to obtain significant productivity gains by just taking advantage of AI to automate some of micro tasks and repetitive internal reporting. And one example could be, just summarizing, news, select a few markets, a key macro elements that they want to monitor, a few central bank policy indicators, some of the news, and quickly just generate a summarization from what has happened in the last 24 hours in the context of financial markets, adding additional charting and then potentially additional context. So AI can achieve quite a lot in terms of automation, processing information, and summarization. But at the end of the day, it's down to the human to provide the additional context. So having that flexibility where you can automate a lot of the tasks that take significant time, so the heavy lifting, and then focus really on the context and the qualitative comment into some of these reports can really yield significant time savings in the process. The second example that we're talking about was the inclusion of non-traditional data sources. So really is processing significant amount of news and social media in real time and derive what we call market sentiment. So naturally, financial and macroeconomic updates are crucial to monetary policy. However, they should never be looked in isolation. So nowadays, news and social media can really move markets very suddenly and dramatically, as we have seen in the last couple of years. So it's really important that central banks can also monitor in real time and convert, a high volume and variety of professional news and social media that derives market sentiment. And so basically it's just leveraging innovative alternative data feeds and performing high speed, AI based analysis to process millions of news and social messages to really identify the emergence of new risks or impactful events. So monitor speculative crowd risks across economies and select potentially, different segments of the market. It could be at economy level. It could be at, for example, bond pricing. It could be specific list of financial institutions, and really understanding what is the market sentiment for those segments and how is that shifting, and if that can carry any systemic risk or impact in financial stability. So really leveraging news, social media to derive market sentiment is crucial when looking from a risk management perspective. And the last one, which is directly linked, is really around market risk. So we've seen significant amount of central banks having enterprise risk frameworks being developed, and naturally a lot of the different risks will feed into that: operational risk, financial risk, legal risk, reputational risk. So it's really important that they are empowered with the information to manage their policies, identify risks, assess them, but also mitigate them. So from an enterprise risk perspective, is really how do you analyze also the markets to identify different type of risks, monitoring regulatory changes, not only in the domestic context, but in the context that we operate in a global market environment that we are interconnected. Geopolitical third-party risks that could naturally impact central banks' policies and the execution capability. So naturally, it's quite difficult to sometimes to process and capture all these high volume of news sources and then perform analysis. So we've been working with some central banks to develop some custom solutions to support the analysis that really involves the summarization of news grouped in different buckets that provide that level of insight and analysis in a real time or potentially in a standard reporting timely manner, and really capture different segments: geopolitical, operational risk, and financial misconduct. But offering the flexibility of determining what that is, how do you measure that, and how do you consolidate that information. So those are some of the examples, especially that we have seen now, a lot more interest, a lot more noise around AI and how that can be deployed to automate and bring different level of efficiencies to the central bank. So I think going back as a final note, so all of that is now available. Central banks are very active in implementing that to enhance their decision-making process. I think that has a significant dependency on accuracy and timely data. So really incorporating that in their processes is becoming crucial, especially now in the context that there are so many different data sources, and the amount of data that is required to be processed is quite significant. So that's pretty much it from my side. Slightly over time, but hopefully still within the time that we had allocated. And I just want to check if there is any particular questions.
Yes, Nuno, hi. There is a question to you
Yeah.
from Carolina. Since it seems there is an AI behind the solutions, how LSEG is planning the compliance of an AI Act? Maybe James can join us in answering this, because we definitely have two aspects for this. One is like our regular products, and another one is the new innovative AI initiatives that Nuno mentioned.
No, it's a great question. I think a lot of these are still at early stages of development and not fully deployed from a production perspective. So internally, we have very strict policies and committees that we need to go through, ensure that we comply with AI policies in the local context, but also within our own policies. We have been quite open in terms of sharing some of these with global markets as well to ensure that we support the best practices. So I think we live in a very fast-moving environment. So a lot of that is gonna evolve over time. So is really ensure that we stay up to date with latest regulations and we comply with those, and those are incorporated into any new product that we deploy, either AI or just standard data releases, technology, and so on. So fairly thorough processes, but also to ensure that we align with the DORA Act in terms of operational resiliency, data privacy, and different elements associated with that.
Thank you, Nuno. James, do you have anything to add?
Yes, I could say from a DORA program management perspective, the only area that we're using AI in is to help our customer assurance teams be able to respond to DORA queries, because they will come in many different shapes and forms and languages. So we're going to be using AI to support the interpretation of that, because the majority of the queries we get would really distill down to customers asking for register of information data or information that supports the specifics of their DORA compliance, but they'll come in a lot of different shapes and forms and formats and languages. So now I know from adding to what Nuno was just mentioning, we do have this critical strategic partnership with Microsoft, and our Workspace product is going to incorporating some elements of AI, but as Nuno said, they'll go through careful scrutiny for launch. And I am certainly not an expert in Workspace, but I think that would be an interesting and exciting topic for another webinar to talk about, products like that are evolving and changing and how they're leveraging these types of new technologies. So maybe one to engage with you all again on at a future date.
Thank you so much. Thank you, James. Thank you, Nuno, for answering the question. So our time, we're 1 minute overdue. So, but if you have one last question, I will be happy to voice it out. Do you have any questions you want to ask right now? Or I will close this webinar and we will take them all offline. So no questions anymore. Thank you everyone for joining. It's been a very exciting 90 minutes. If you would have any questions, please go to your account manager and they will contact us to the experts in DORA and all related, or experts in central banks in our organization. And looking forward to meeting you on future endeavors. Thank you so much.
Thank you. Have a great day.
Bye.
Thank you.